5s. That steeper 2s 5 should lead to a bit of a short trade coming in bonds. That short trade in bonds went 183.10s to 182.20s. Beautiful. That's what we like to see. How did that short gold end up doing, Paul? What do you think? How did that 1740 sell that we called last night and then again this morning? How did that do? How did that do? Boom! Right? 1740s just traded 1725s, guys. $1,500 unis. $1,500, guys, a contract. Is that sexy? I'm tooting right, that's sexy. Yep, absolutely, guys. What a sensational little trade. Well, is it more than you expected, Paul, after this morning's classroom? Is it really more than you expected? You might recall in just this morning's classroom, we looked at the, for example, we looked at the 30-minute chart. And this is what we saw, wasn't it? And what we saw was gold prices that actually could be technically trading as low as maybe 1600, 1698, 1700s. You see what I'm saying? See how that's massively overpriced against everything at this stage. Now, it's because of the short-term value that's been improving that a lot of people get confused with this, because they don't see that there is huge macro value in that gold at 1740s. Hence the reason why we believe that there was still an awful lot of commercials punching into the 1740 area for that short bit of business. So I don't think it was more than expected, Paul. I think it was less than expected, but understandable given the short-term upside that we started to see here. So, you know, I'm a little bit disappointed that we've not done 1726 break lower down to maybe 1715s or something along those kind of lines. That to me would be more in line with the overall shape of what's diddling in this area here. You know, I think in terms of real valuations, I think probably around about the 1715 to me would be about fair value just now on gold, which would obviously be a measure, kind of measure. 28s to 40s, of course, 12 points. That takes us to around about 16. So 15, 16 would be the bracket measure around about this area here. So that to me would be reasonable, I think, personally, Paul. I think that would be reasonable. Maybe it's aye, maybe it's not, but I think so. Sexy, anyway, whatever it is. That macro plus micro is Sexyville, Tennessee, I'll tell you guys, beautiful. Smoking. Top edge, chilling like a villain, and then a beautiful sell-off down to 25s, guys, beautiful. Short-term bids coming back in against that upside, obviously real yields not moving any further. Grabbing the attention, of course, of the bonds at the bottom edges, and that's pulling the bond price back up a little bit as well. Alrighty, what else are we looking for, guys? What else? All right, I mentioned earlier about this this financial lead. Let's just show you what actually happened with that financial lead so you get a handle on how powerful that tiny little bit of information was this morning. So here's a good screenshot of what diddled. You can see we got a very big, just after the cash close, we got a big pop on financials here. And that left the 2s, 5s isolated badly at the bottom edge. Now, that's not enough. Oh, no, that's not enough. We need to make sure that we've got a bid coming in the 10s, 30s at least to confirm that the financials are right. There was a bid coming in the 10s, 30s, wasn't there? Oh, yes. So now we've got a way of being able to confirm. Now we've got a way of being able to confirm the 2s5's validity for a buy or a sell trade. Knowing that we've got a way of confirming the 2s5's validity for a buy trade, we can then work into our bond prices and start looking for that commercial offer at the right time of the day, not any random time where we see a volume spike, but at the right time of the day, in this case at 1342, around about those areas. You know, obviously it started a little bit before that. It actually started here at 1336s. And you can see that this rally here started away over here, 1335, 1336, 1337, 1338. And then we get the move. Then we get the move. Starting to expose to the top side here. And obviously that's something that you're obviously very aware of. You've already seen the bond ultras starting to move away from that. So it's a little bit disappointing that we're not getting the bottom edge bond as a very easy buy at this point, because obviously everything now sets up beautifully for the bottom edge bond, but it's moved off the bottom edge by now anyway. I'd be interested in that gold if we were to get a short-term stop at the bottom edge, Paul, maybe a 1724 break. Might be interested in a little quick scalp bid against it. Might catch my eye. Aye.